Welcome to this latest Power Briefing with Commercial Observer. My name is Tom Acatelli. I'm a co-deputy editor here at Commercial Observer in New York. And the title of this particular briefing is Breaking Down the Modern Deal, Data and Tech Become Key Market Participants. So I'm going to introduce the topic a little bit and then introduce our panelists. We have a Q&A open. You can submit questions for later on in the hour. So just to start, the globalization of the real estate market has fueled the digitizing of deal management, a trend that has only gained greater momentum in the wake of unprecedented business challenges this past year and a half. A truly global market requires real-time, remote collaboration, and real estate experts are becoming increasingly dependent on technology and data to deliver on large-scale deals. So we're going to hear how new cutting-edge solutions and robust data sources are driving deal activity and what this could mean for the future of the commercial real estate industry. So our guests today, our panelists, Colin Apple, Co-Chief Investment Officer and Managing Director of Acquisitions at Bridge Investment Group, a real estate private equity firm. Holden Latimer, Director and Vice President of Acquisitions, Asset Management, and Dispositions at Bridge Investment. Okay, multifamily, yes. Actually, I think I messed up Colin's title. Is Co-Chief Investment Officer and Managing Director of Multifamily Value Add Funds and Managing Director of Multifamily Acquisitions at Bridge. And then Mike Sroka, co-founded DealPath, a real estate technology company in 2014, and is now the Chief Executive Officer. So for Colin and Holden to start us off, okay? Well, first of all, can you guys tell us a little bit about what Bridge does? Just introduce our viewers to your company a little bit.
Sure. Yeah, Bridge Investment Group is a real estate focused private equity company. We've got several verticals. Holden and I work on the multifamily investment verticals. We have a multifamily strategy that has a value add and a workforce affordable housing strategy. So we have two multifamily strategies, and then we have an office, commercial office vertical. We have a senior housing vertical, and we have a debt vertical. We are a large investor in the opportunity zone space, and I'm trying to think of what I forgot. We have a senior housing vertical as well, and we recently launched a triple net industrial vertical. So we are heavy focus on real estate assets. We have a large focus in secondary markets, and at this point we've got over 25 billion assets under management.
Okay. I might ask about some of those at the end, the workforce housing and OZ in particular. But to start us off, can you guys talk about, what were some of the challenges to efficiency that led Bridge to adopt DealPaths technology and to seek them out in the first place?
Well, we had I want Holden to jump in on this too, but we had several things going on within our group. We call it pre-2016. Our asset management and our acquisition teams were separated, and so it was separate groups. So we made a decision internally that it made a lot more sense for us to combine efforts so we could keep the team that was responsible for buying the properties to also asset manage them through the life of the deal. So we went from a group of, I don't know, Holden, we were probably 7 people, and our group expanded. We're close to 25 people now. So we were expanding our team, and we were also expanding our responsibility, and we wanted the ability to monitor the work. We wanted the ability to have consistency through all of the people that the additional people that we brought onto our group. So we needed a system that was better than Excel, something that we could track, something that we could see online, we spend a significant amount of time on the road, and we needed some sort of central database that we could keep our information and communicate with each other. We also had as I mentioned before, so Holden and I work in the multifamily strategy, which has two efforts. So we expanded our responsibilities, and so we were expanding our unit count, our property count, and we just needed a better way to keep our data together. And then I think probably most important for me is we were finding that the third-party data providers that we subscribe to and still do, we found that there seemed to be a delay or a disconnect in some of the information, and we wanted to compile. We spend a lot of time, and we may talk about it later, but we try to see as many deals in the market that we can. So we try to underwrite. Our team tries to underwrite every multifamily transaction that we can see, nationwide. And there are a few markets we don't, but for the most part, we're underwriting every deal. So we're compiling a lot of information, and I think historically that information, we put it in our server on Box, whatever we're using, and we have those underwrites and we have that information, but it was scattered, and we didn't have it in a central spot. So we found that and I'm particularly referring to understanding where cap rates are going in the market, and being able to understand that. And we looked at DealPath as a way that we could compile all of that information, and we'd be able to filter it and understand it better, so we could have more real-time data in all of our different markets, because we're underwriting so many deals, so we could see what we view as a true cap rate, where trends are going, and on top of that, we could see because everyone's got a different input for how they are looking at cap rates, and we wanted to look at it from our perspective, so we could compare apples to apples to our underwrites and what we see as market cap, and how we could project our exit cap rate. So it was a way for us to organize the data that we had been compiling for years, and to be able to track the market a little bit better. Okay. But Holden, you may have another thought.
Yeah, and I think Colin hit a lot of our pain points. Going back to team size and structure, we had a exponentially growing team. So when I started, I think we had 4 or 5 analysts. Now we've got over a dozen. We're also tracking more deals in various markets. So team structure had changed. Number of members on the team had changed. We needed something that we could scale better than Excel and communicating through Outlook for our pipeline and for our task management processes. We also were managing higher deal flow, looking at new types of transactions, new markets. And just to give you kind of an idea, I think our team probably looked at over 1,500 deals across the country last year, which last year was a down year in terms of number of deals we were evaluating. So we just had a massive increase in what we're looking at, number of team members that needed to coordinate across that pipeline and across our various tasks. Another one was just a big pain point for us was finding a cloud-based solution, something that was real time. Having a dozen analysts trying to update a report in Excel and have that up to date for meetings and everything was becoming a real issue. So we had been looking for a cloud-based solution for quite a while when we kind of came across DealPath, and they seemed to check a lot of the boxes that we were looking to solve within our firm.
You both talked about Bridge growing. Was this during the pandemic, or had it been going on for a couple of years, or?
For several years.
Oh, for several years. Okay.
Yeah.
Mike, I wanted to ask. Okay, can you explain what DealPath does for companies like Bridge? And pretend someone doesn't entirely understand cloud technology and how it might relate to real estate or real estate investment.
Sure. And Tom, thank you for having me on, and thank you to Commercial Observer for hosting us here today. DealPath is the industry's most trusted, purpose-built real estate investment platform, empowering hundreds of leading firms, including Blackstone, AEW, Oxford Properties, Principal Real Estate, and Bridge Investment Group to invest in the built world. And really excited to be here speaking with Bridge, because we really view them as kind of a case study of what good looks like in terms of leveraging a modern real estate tech stack, operating at scale with speed and proficiency, and really impressively growing their investment program with AUM and empowered people. DealPath really serves as the command center for the front office to focus on value add work, to identify and mitigate risks, and to deliver optimal risk-adjusted returns. I always think of us as kind of like pipeline through portfolio management. And excited to talk more about kind of Bridge's use of both DealPath and more broadly technology. I think, maybe going back to your question, our clients need to operate at scale. And, they are raising, deploying, returning on billions of dollars, and need to do so with speed and precision to deliver optimal risk-adjusted returns. Two of the key challenges to address are decentralized data and highly complex workflows. And we think that investment decision glory is really when you can see the performance of your owned portfolio overlaid with the opportunities that your team is seeing in the market and the comps of every asset and deal that you've ever looked at or worked on. And that is really what DealPath provides, having that centralized data that is globally accessible, configurable workflows that enable your team to work effectively from anywhere, and the data security that leading institutions require.
Mhm. I know you probably can't get into proprietary information, but how did DealPath develop this over the last several years?
Yeah, DealPath has really been born out of years of hearing the needs from the market. I started my career in real estate finance at a very large scale real estate private equity group. And former colleagues and friends were really persistent in describing the challenges that they're facing and their search for better solutions for this very important work. We've built out our platform and company quite a bit over the past 7 years. And today, again, are excited to be supporting more than $6 trillion of transactions and many of the largest, most sophisticated real estate investors in the world, including Bridge Investment Group.
What's the growth been like during the pandemic? I'm just curious.
I think the short story is we've had fantastic growth and it's been a very big year for us, but I don't think that was obvious. Like everyone else, I think last March when we really began to recognize the pandemic in North America, we weren't sure what to expect. Our business was able to transition to mandatory work from home very seamlessly as a software company. But initially, we were seeing polarization in our sales and go-to-market efforts. But we were seeing some accounts that were pushing out for reasons that you might expect, where management teams were struggling to meet together and make decisions. There was anxiety about making budget decisions during this time of uncertainty, frankly, kind of triaging other parts of their business. But on the other side, we were really seeing a influx of inbounds from accounts that were transacting very quickly because they felt like they needed to have a collaborative platform in place for the work ahead. And there had really been a spotlight put on the need for having that centralized data and those configurable workflows. So we've had our highest growth periods ever. We've seen our sales cycles compressing. And beyond just DealPath, I think that the pandemic has very clearly been a accelerator in the digital transformation of real estate. I think, look back 7-8 years ago, there wasn't a whole lot happening in real estate software services. There was a few very large incumbents that the industry has used for a long time, but not a lot happening. And there's been a wave of investment and development measured in the billions and billions of dollars of venture capital and hundreds of thousands of new point solutions that have been coming to market. And before the pandemic in 2019, I think that we were really kind of starting to see real traction in the adoption of some of those new solutions and maybe crossing the first chasm from early adopters to early majority of the real estate industry leveraging some of these new solutions.
Right.
And with the pandemic, maybe crossing the next chasm from early majority to mass market adoption of these new solutions. So again, I think that it's been an incredible year of growth for us, and we're very excited for our business. More broadly, though, I think that real estate has been underserved by software and technology for a long time, and is going through a belated and very accelerated digital transformation.
Mm-hmm.
That's really the most important thing for everyone in the market, whether you're a traditional real estate owner or operator or a vendor or new upstart. An incredibly exciting time as the industry kind of moves to digital.
Right. That's a very good point. How did you guys connect? How did Bridge and DealPath connect? Any of the three want to answer? I'm just curious. How's a discussion like this? I mean, it's a big move for a company. It's a major move, especially given the conditions of the last year and a half and the growth in the company itself. So how did you guys connect? What were some of the catalysts?
Yeah, I'm happy to share my perspective,
Okay.
but for Colin and Holden, want to maybe defer to you first.
So I'll go, and then Holden, because Holden was the big proponent to make this move, and so we had a few people. There are two in particular. I'm thinking of Holden being one of them that came up to the managing director and said, "Look, we need a better solution than what we've got right now. If the scale that we're talking about going to, we cannot continue to do everything with Excel. We just there's too many errors. There's too many." Issues with people changing spreadsheets. There's, we need a better sense of consistency. So we had a few people, and Holden, I want you to weigh in here, but go out and look at some different options, and they eventually came back with DealPath. So I was really introduced through our team. Holden, how did you get introduced to DealPath?
Yeah, as Colin said, I think we were experiencing a lot of pain points with our growth and just maintaining, consistency in our process. And we were really the key thing we were looking for was a cloud-based system to do our transaction pipeline management. And we had looked at a couple companies, and we had our process pretty well defined and built out in Excel, but we were just having issues with having that many users in Excel and keeping things consistent. And the other groups we'd looked at had provided okay solutions, but it was essentially just making our current process cloud-based. It was just kind of replicating what we were doing in Excel in a cloud-based platform. I just stumbled. I think I just got an email from someone reaching out from DealPath. Kind of looked into the company, looked exactly kind of what we were looking for, and so that's kind of how we got connected. I reached out, went through a demo, and then kind of escalated it up to my managing directors, and that's kind of how we got connected. I'm
curious, how big would these Excel spreadsheets get that you were dealing with? I mean, there's only so many tabs.
Yeah, they were getting pretty massive. As I said earlier, we were tracking thousands of transactions over periods. So we ended up breaking it up into different periods, right? We didn't track all our data in one place. We would break it up annually, just so that spreadsheets wouldn't get too enormous. And again, the big thing, we were starting to have over 10 plus analysts that needed to update these sheets on a weekly basis, and it just was a massive pain to try to get that all updated at the same time and have a live sheet that's up to date for our leadership.
Mm-hmm.
And they were getting pretty complicated. They were, we were trying to program them so they would send out reminders and all the things that would make a lot more sense on a platform like DealPath rather than coding within Excel. So they were just getting very complicated and easy to break. And so there was a lot of fixing going on that we wanted to focus on our core business of investing in real estate, not in fixing, spreadsheets.
Right. And I imagine there's a lot more, Mike could probably talk about this, but there's a lot greater security, right? In cloud-based technology than Excel or a spreadsheet system like that, correct?
I think that is true. And I just maybe want to follow something that Colin and Holden were both mentioning, because I think it's really important. DealPath was the category creator and now the leader in real estate deal management. and is purpose-built specifically for the work of these investment teams. And historically, teams have been forced to cobble together tools that weren't designed for their important work. So whether that be, using Excel for, pipeline reports, or using Word documents for due diligence checklists, or various different file sharing services to house their transactional documents, and emails and phone calls to communicate around those things, information has been scattered, and those workflows have been inconsistent and tricky to continue to coordinate people. There's also been great efforts to try to customize generic CRM systems or other things for this work, which also hasn't resulted in the solution that people need. So I think more than anything, being designed for this work has really enabled us to provide the functionality, the UI and UX that is really needed to be able to accomplish this work at scale. So I would maybe just take a little step back again and look at some of the changes in real estate, where real estate has become institutionalized as a global asset class. That's a fact. And there's very clear economies of scale in real estate management. And Bridge being a great kind of proof point of the efficiencies there. And so as this market becomes more and more complex, more competitive, and operating at large scale, you must have systems in place to do this work. And that, I think, is really kind of the evolution that we're seeing, is that move from cobbling together tools that weren't designed for this work to really being able to identify the needs and now the solutions available to have the right platforms in place to move forward here. And we've been working hard to first create this new category and build out our platform, and really drive awareness and interest, and hear from the market what their needs are. And so, Bridge discovering DealPath, I think, is kind of that mutual work of Bridge thinking about how to build and scale their investment program, and DealPath and other participants in the market, really working hard to solve for those needs.
Mike, just very quickly, you mentioned UI and UX. Those are is design software, right?
That's right. The user interface and user experience are so important as it comes to adoption and engagement with software tools and solutions. And this is, one of many reasons why being purpose-built for real estate investment is really, really important. We have designed a platform that is specifically catering to Colin and Holden's needs, not to a broad array of things. We're not everything for everybody. We want to build the best solution for institutional investors that are doing this important work.
You also mentioned, just very quickly, CRM. Not familiar.
Yeah, that's an acronym for customer relationship management.
Okay.
And I think of like Salesforce as really the leader in this space. Because another important part of real estate is managing your contacts, the people and companies that you work with. That is adjacent and different than your deal management and portfolio management, but they're related with each other.
Okay. Back to Colin and Holden. Can you guys talk? You've talked about some of the organizational advantages of this technology, but can you talk other specific advantages of using DealPaths technology, particularly during the last year? How has it helped, and how do you think it'll help going forward?
You want to kick us off, Holden?
Yeah, so I've got a couple thoughts there. In terms of team coordination, obviously that became vital during the pandemic, when we went from everyone being in the office every day to everyone working remotely for long stretches of time. So the ability to work within our teams on DealPath gave us the ability to, in real time, be up to date with where people were in the deal flow and our processes. So the team coordination aspect of DealPath became paramount. Ability to communicate back and forth. I think an unexpected benefit of DealPath that we weren't anticipating was just the ability to track history on deals. In the past, we would track things in Excel, and then, if we had to go find out what happened on a certain transaction or task, we'd have to go search through our Outlook emails, other forms of communication to kind of get a history of what had happened. DealPath allows us to kind of track and keep all that information in one place. So on a certain deal, on a certain, due diligence item, for example, we could have a history of what documents we looked at, what communication was back and forth, and what happened. So that during the pandemic, I think was vitally important for our team. And so other unexpected benefits I think of the platform was mapping integration, which we had been doing with Google Earth or separately from the rest of our process. The user experience in DealPath, seamlessly integrates mapping technology with how we're tracking deals and how we're looking at things. Other things that we didn't anticipate, we've kind of went from using DealPath exclusively for our transaction platform to also using DealPath to manage our asset management processes. So yeah, we've found a lot of value add from DealPath outside of what we anticipated getting from the platform. And the more we use DealPath, I think the more we see, the benefit of kind of keeping all of our processes, consistent and housed in kind of DealPath. So I'd say those were kind of some of the main benefits that we saw during the pandemic.
Yeah, and I just add, I don't think we've experienced all the benefits that we will. I think we'll continue to evolve how we're using the data. We've got a built out business intelligence team at our company, and they are using DealPath data to continue to improve our data analysis and combine it with our operating data and really come up with some pretty interesting stuff. So, I think we're just starting to scratch the surface of the data that we've been able to house from DealPath.
I'm curious, and Mike can jump in here too. How long did it take to integrate everything, to get it up and running? What's the timeline of something like this?
I will defer to Colin and Holden.
Holden, when you want to take the Holden's really he's worked with DealPath a lot and building out. As he said before, we had a pretty robust structure and a lot of templates that we worked with before, but Holden's really been the architect of taking what we had built in Excel and moving it over to DealPath. So Holden, you want to take this?
Yeah, so I think we've been using DealPath for just over 2 years, if I'm correct. The onboarding, I think it really depends on how custom built you want the platform. And we, as Colin said, we kind of had a very well built out process, checklists, how we were tracking transactions. So we wanted to really customize the platform for us, which is another benefit of DealPath. It's very, it's very customizable. I'm sure they've got, solutions that you can integrate quickly. For us, we're still integrating. It feels like, the integration wasn't difficult, but the more we use it, the more value we see in it, and the more we're bringing other processes into the DealPath platform. So I think it just really depends on what the company is looking for. If they're looking for a custom built solution, I'm sure DealPath is great at doing that. Like I said, we've spent a lot of time trying to customize it to how we want to see the data and how we kind of work through our deal flow and processes.
Mm-hmm.
And I could maybe just follow that because I think that implementation is so important for success. Change management is very hard. And we want to make sure that we're guiding a program that is going to help clients get the most value out of our platform. So when you sign up with DealPath, we're going to assign an implementation team to your account. They're going to configure the accounts to your preferences. They're going to reload the existing data that you might have and want in the system. And they're going to train your users, both your admin users and your end users. And it is common and typical for us to have implementations that are 10 to 12 weeks long. They can also be longer or shorter based on the needs of particular firms. Bridge is an example of a very sophisticated, large-scale firm that is utilizing a lot of capabilities and continuing to grow their firm and usage of DealPath, and are thrilled to partner with them for the growth of their business.
How long have you been working with real estate companies in general, particularly from the institutional side?
Really from the beginning, I guess that's what we're designed for. So I would say, since 2014, about 7 years or so.
Okay.
And, career-wise, I started my career in real estate finance a couple of decades ago. So it's been a while.
I want to ask also, Mike, are there particular features of the technology that larger, more diffuse companies might find beneficial?
I think that the high-level things are probably similar between kind of the mid-market and large scale of, those themes of having centralized data, having these configurable workflows, having that data security. But with larger and larger teams brings more complexity and oftentimes higher needs around compliance and the administrative controls to be able to configure and manage, lots and lots of users across different teams. That's maybe where I would call out some of the differences between some of the largest institutions and some smaller, leaner teams.
That's good. I mean, again, a question. This is a question from somebody who might not know cloud technology that well. Does geography make a difference at all? Where teams are, how big a footprint a company has?
For DealPath's perspective, we view real estate as inherently a local and regional business. We view capital as global. And right now, the need is how do you connect global capital with local and regional real estate? This is very clearly a global business and global opportunity. For practical reasons, we will focus our efforts on different segments of the market where we see kind of the highest net value. And today, a majority of our clients are headquartered in North America. And very quickly building out to support that global business in geographies, both in EMEA and in APAC.
Okay. I also want to ask, this is for all three of you. So, I think it was Colin who mentioned, or Holden who mentioned the speed of the data, of data sharing and the speed of communication that this sort of technology affords. Can you talk more about that? The advantage of that.
I think the part that I was talking about was the speed of the data and how quickly things are moving. And in our space, we focus in the Class B multifamily, suburban, high growth markets. And there's been a lot of movement in pricing in that space in the last 5 years, really 10 years. And what we saw, we historically had looked at some data from one of the brokerage companies and cap rate information from the CoStars and the Reeses of the world to see where we thought, they provide quarterly reports to show where cap rate trends are going. What we found is that quarterly report was not keeping up with the transactions, and so we were seeing cap rate movement that significantly outpaced what was being put forward by these third-party data providers.
Mhm.
And so we wanted to house that information. Cap rates based on our underwriting. So we were looking at our NOI versus, the price that we knew the deal went for, either because we bought it or because we know what somebody else paid for it. And we had that information before the property actually sold. So we were able to get we are able to get real-time data on transaction activity, which helps us make our decisions when we're looking at these markets. So that's what I was referring to. I'm not sure if there was something else regarding
Okay.
speed.
Now, I was going to ask about real-time aspects. Like, what information is desirable in real time? Like, and how does a technology like DealPath provide that? Like, what do you want in real time?
Yeah, so I probably can address and kind of speaking back to Colin's point, customizable reporting that's live within our system is very important. So, an end product of that was our sales comps in real time that we could pull, everything we've underwritten up to the second, essentially, as long as the data has been, put into the system. We can pull custom reports for any region, any metro, any kind of subset of data that we want to look at. Because essentially our teams are underwriting every deal in our target markets that fits our size and vintage profile. So we just found that having our own internal place where we're tracking that data was far better than the third-party resources that we were using. Other situations where I think the live, updates and data are helpful is, we could even be, as an example, we'll have a weekly checklist meeting for deals that are under contract. I can be in that meeting and my analyst can be presenting what's happened over the course of the week. I can be in the system at the same time and even be scrolling ahead of them in the checklist. And if I see something I'm like, oh, we're done with that, I can, check that off in the system, add a note, and that literally updates pretty much before they scroll down to get to that item. So that's how, how real time I think the updates and data within DealPath is. So that's very powerful for our team just in terms of efficiency and communication and getting things done. So as we're growing and looking at more deals and our team becomes bigger, I think that'll just become more and more important for our team.
Okay, how does something like that work to be that fast? Is it an algorithm? What do you got? How do you guys set that up?
Is the question about, how we're providing this real-time access to data? DealPath is a cloud-based application that is designed for collaboration. We ingest information from any place that you have access to it. Within DealPath, it's very well organized and designed for collaboration. And so, as kind of Holden and Colin were both describing, maybe from an aggregate level, historically, teams have had a investment committee meeting, a pipeline meeting once a week. And the team frantically scrambles to organize all of the information for that meeting. Now, the entire team always has access to the live pipeline and can drill down into the specific deals and see the latest version of the model, the latest assumptions, what's going on, who's doing it, what's coming next, et cetera. So this is, one of the many benefits of being a purpose-built cloud-based platform, that you've got this kind of single source of truth that your data is residing in, and your team is able to appropriately access and add and collaborate together. Again, that is relevant when you're looking across a number of deals. It's also relevant for a specific deal. So as teammates might be spread out or working on various different things and projects, you are very easily able to go into a particular deal, understand all of the history of what's known about it, where it's at today, what's coming next, who it's assigned to, who's doing what when. So having that appropriate transparency, that accountability, and most of all, access to the vetted data, that is what is so important.
Okay. As we venture past COVID, thank God, and given the economic boom underway, what will be in demand technology-wise from real estate companies? What do you guys think on that front? So what aspects of technology will be in demand? What what information will be particularly in demand, and how to get it.
Yeah, I would maybe defer to Colin and Holden on, how they're thinking about the future and what, maybe some of their strategic priorities are. I'm happy to kind of share our perspective at DealPath as a vendor, but probably most interesting to hear kind of how Bridge Investment Group is thinking about it.
So I think like you, Tom, I'm hoping we get past COVID and in the near future, and we get back to having face-to-face meetings and putting deals together on the road and all the stuff that we're used to doing. But I think we're an operating company at heart. We're an operating company that became an investment company. So operations are extremely important to us. I didn't mention before, but we have over 40,000 apartment units in our portfolio. We've got an in-house property management team that's the foundation, really the foundation for our company. And I think what we'll see a lot is data becoming a significantly more important on the operation side. I think our property management platform is looking at a lot of, as I mentioned before, a lot of business intelligence opportunities, and I think size will matter, and the ability to leverage that data. We've put together our own pricing software based on the data that we've got, and some really intelligent people at our company that have been able to figure out what we think to be a better algorithm than some of the off-the-shelf options.
Mhm.
Just as an example, I mean, a lot of the revenue management software is based off the airline model, and what we've realized is that you may be better off to keep your vacancy a little higher and hold out for a little bit higher rent, because you're signing annual leases. So if you drop your rent, like the airline model, you're sacrificing a lot over 12 months. So in any case, we've worked a lot on that side. I think again, on the operations side, virtual tours have become more important. I think that will continue in the future. There's a lot of different options for these virtual tours. There's services that that shows your apartment with your furniture in it and what it looks like, and I think that'll become more and more important. It's silly, it doesn't seem like a big deal, but drones are becoming more important. Aerial photography is more important at these assets. Selling, being able to show a resident what their community looks like, and we spend a lot of time and effort on amenities. And that amenities may become bigger and bigger as I think tertiary markets will continue to grow. I think I do believe that their office will come back, and there's a strong story for office in a lot of different markets. But there's no doubt that work from home to some extent is here to stay. So I think people being able to live further from the office will drive growth to these more tertiary markets. So the amenities are important because at these assets, and being able to sell that with aerial photography from these drones will continue to become more and more important. So there's a lot happening on the ops side from the title of this, I think, is deals and technology. So here we are on Zoom talking to each other like we're in a conference room. So I think that'll continue to be important.
Right.
We have a lot of meetings with investors, virtually. I hope we get more in person, but I think this technology is here to stay, and we'll continue to have a lot of face-to-face through the computer.
Yeah, I agree. I mean, I don't think that we're never going back, that's for sure. And real estate has always been driven by people with information. And that will continue to be true. We just have access to so much more information now, and we need to be able to process it accurately and quickly. And so I think that those themes continue. From our perspective at DealPath, we believe that the future of real estate investment management will increasingly be more programmatic portfolio management and transaction execution, but it's going to take a lot of work to get there. And the first steps are, how do we help organize and structure all of the data that these firms have and have access to, and visualize it so they can be more data driven in their decision making and start automating some of the steps along the way. And that's really what we've been marching towards, and really see a future ahead where DealPath is where the built world transacts online, and that movement of transacting online is in flight now, and still a lot of work to be able to unlock the full value and potential there.
I want to ask, okay, so what's out? We talked about what's in as far as technology and deal making going forward, but what's out? What's not as necessary? What's not as in demand, do you think?
We don't spend a whole lot of time thinking about what doesn't matter. So I'm not sure if I've got like a really organized thoughts on what doesn't matter. But am keen to kind of learn from Colin and Holden what is most important to them, and what things that they're seeing or interested in, or where they see gaps, and are looking for better solutions.
Lotus notes are out. I do know that. I'm the same with you, Mike. I don't know what I would say is out. I would say what's important to us. I mean, we, on the deal side, we we use the software that helps us analyze financials and analyze rent roll in a very timely, consistent manner. And we use DealPath to help us house all of our data. I can't think of anything that's that was in that's now out. I think Excel is, we put down Excel a few times in this call, but it's still extremely important in our business. We use it all the time. I don't know, Holden, do you have any thoughts?
No, I mean, you guys spoke to kind of the operational efficiencies in DealPath. I think that, the data and transactional side, more so what's in, there's not a lack of data in the world. It's just, there's a lack of efficiency in evaluating the correct data. And that's kind of what we're trying to do. We're trying to house all the important data that we need as a firm on the transaction side specifically. And I've only been in this industry for 8 years, but this feels like the hottest transactional market I've ever seen. I don't know if it's been this way in the past, but it just seems like our ability to quickly and efficiently analyze the data and pick out the deals that are important to us and be efficient in pursuing those deals is really important, probably more so than it's been in the past. We're seeing deals that are coming out and being preemptively offered on really short marketing periods. So the number of deals that we're looking at and our ability to quickly analyze the deals that we want to target and pursue is very important and vital for our company.
I would just say another very important part to all this, and as I mentioned before, we've got a lot of different verticals and offices around the country, and for us, we want to be able to bring all of this data that we've got in multi or office or senior housing and put it all together. And so it's going to be really important for us going forward is to name everything correctly so that we can tie it together and have be able to have consistent information that we can compile. So that I think that'll be over the next the next project will really be making sure that we've got a consistent structure to our system.
Holden, how short are some of these windows you were talking about?
They could be very short. I mean, 2 to 3 weeks on deals that are on market, and then off market deals. We may get, someone reach out with a deal. We need to analyze that and have kind of feedback within a couple of days. So the more data and the more live that data can be, I think the more efficient our team is in evaluating those deals and really hitting the opportunities that make sense.
Okay. We have about 10 minutes left, and there's a couple questions from the audience. This is for Mike. How does DealPath handle data security?
This is so important. For our business, we're supporting the largest institutional investment management firms in the world with their most important business information. So confidentiality and trust are kind of the foundation and core of our business and affects everything that we do. Maybe among some of the important elements that we've invested in and provide is maintaining SOC 2 Type 2 compliance, which is a very rigorous standard, and we're audited on annually, as well as the Cyber GRX Tier 1 assessment. And both of these things are evaluating our systems and our organization for security, for processing integrity, and for confidentiality. There's a lot here to this question, and I'm happy as a follow-up to go into different areas and elements of it. But I would say that this is something that real estate hasn't had to think about a lot previously. And now, as so much of the proprietary information is being housed and managed in cloud services, it's really critical that we quickly become proficient in thinking about and managing data security. Everyone is very excited to build data assets. We've got to remember our balance sheets, that there's also data liabilities and needs to protect those things.
Do you want to go into specifics really quick, or?
I think it's too broad of a topic unless there's a follow-up that gives me direction.
Yeah, there's this, how can a user be confident that their data isn't shared with the competition?
Right.
Good one.
Sure. That is absolutely the core of our business, which is the access rights and role-based access controls, along with the ways in which we protect that data. So we have a now significant operating history. We've supported more than $6 trillion of transactions. We support hundreds of leading investors, and this is critical for every single one of them. We have a very rigorous technical way of enforcing this. And beyond the technical solutions, I would just say that, for this profile that which many people on the phone, are and represent, there's a very high standard for quality and a very low tolerance for unexpected experiences. Really, really important that DealPath and other solutions are being great partners protecting that data and are representing that contractually in their agreements and are genuinely fulfilling on the controls necessary to do that. So I think that this is a big, important topic.
That was a very good way of putting it, unexpected experiences and wanting to avoid them. I should have asked this toward the beginning, but Holden and Colin, like how user-friendly do you find it? Was it easy to get up to speed after the integration, after it was launched?
Yeah, I'd say integration was great. The user experience is pretty simple. I think for the team members that aren't super tech savvy, it's very intuitive. And then the back end, I think we do a lot of customization on our end. The back end interface, at least from an admin perspective, it's very intuitive, and DealPath provides a lot of support and training in our ability to go in and customize it. So, I think we've done quite a bit of the build out on our own with the support of DealPath. But yeah, I would say the user interface is great. And that was a big value add for us when we were looking at other solutions. DealPath was purpose built for real estate transactions. So the platform is already kind of geared towards that, which was very helpful.
Okay. And I don't know if you mentioned earlier, you both mentioned earlier that Bridge works in workforce housing. I know there's some people watching who might want to know, what markets are in the United States are particularly advantageous or hot or desirable as far as investment in workforce housing.
We spend a lot of time. Our footprint is really in these high growth Sunbelt markets, Southeast, Southwest. But I would say our footprint is. We used to call it the crooked smile. It's now looking more like a smile. But we've got stuff in the Pacific Northwest through California, down through the Southwest, Arizona, Nevada, Salt Lake, Texas markets, Denver, Boulder area, and then, Florida, Atlanta, Carolinas, all the way up to the DC suburbs. But we spend a lot, is another, use of data. We spend a lot of time following demographics, and we have for a while. And there's a pretty consistent theme that I'm sure is not surprising to everyone on this call, but there's a pretty consistent theme from seeing movement from the Northeast, Midwest down to these lower cost, lower tax markets. We're seeing business and population growth in these markets. So that's where we spend most of our time.
Right. I'm coming at you from Boston, and there was one workforce development a couple of years ago. It was like the moon landing, because so many different things had to come together to make it happen because the costs are so high. But
Yeah.
all right,
And that's part of it. I mean,
Yeah.
the cost to build workforce housing is prohibitive, and it didn't help. It doesn't help that lumber's up 300% since the start of the pandemic. So there's a need for this product, which is why we go in and we renovate and we provide what I believe to be very high quality housing at a significant discount to newly built assets.
Okay. I want to thank everyone for tuning in. I want to thank Colin Apple and Holden Latimer from Bridge Investment Group and Mike Sroka from DealPath. And thank you. And I want to thank our sponsor, DealPath, and encourage everyone to tune in again for other Commercial Observer Power Briefings. Thanks, guys.
Thanks, everybody.
Thanks, Tom.
Thank you.